Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, excited to have you here. It is Monday, so that means it's a Money Monday. That's right. We like to go through some stuff to make you guys some money here on Mondays for you guys. Hopefully, you all had a great weekend. Things are rocking and rolling here. It's always good to start the morning off. Like I get up in the morning, do my business, start a cup of coffee. I hit a couple buttons on my laptop to get things rocking and rolling while I'm waiting for the coffee to finish brewing so I can go on my morning walk. It's always nice when you get lists in of notes right off the bat. It's a beautiful thing. It's a gorgeous time when you get lists of notes that come in, especially when you start looking through stuff. Like I've got these sources that send me stuff on pretty much a daily basis with a variety of things. These are sources that we've been buying from. We get lists from them on a regular basis. And it's always a mixed bag of stuff. Sometimes it's good stuff that we like to bid in. Other times it can be stuff that's kind of like, well, it's scratch and dent stuff. We're not really going to buy scratch and dent stuff for the most part, or performing paper or other stuff like that. But what we do get from time to time is non-performing stuff. And the great thing about when you start getting non-performing stuff, because we're seeing more and more of that, is when you start seeing stuff that people are asking for or looking for. And what am I talking about? Well, besides it just being first liens that you can cherry pick from, and I'm always amazed that more people don't bid on that kind of stuff. But when we start getting in multifamily loans, and people are like, oh, hey, this is some multifamily stuff. Why not look at this stuff? And, we see multifamily stuff. We've seen a lot of it in New York. That's no surprise. New York, New Jersey. And this tape does include some of this. But we saw these 20 notes that are coming in, and I started looking at some of the addresses. I'm like, oh, there's some stuff in Georgia. There's some stuff in Florida. There's some stuff in Ohio, Connecticut. All right. Some stuff in Illinois, which I don't really like, even Indianapolis. And of course, there's the stuff in New York and New Jersey. So I'm like, well, this might actually be a decent tape to dive into and do a little due diligence on stuff. There's even one in Milwaukee, Wisconsin. We just had our buddy Corey Raymer on there on our podcast out of Green Bay, Wisconsin, who buys in Milwaukee. So I've already shot him an email with let's see if he's interested in this address in Milwaukee. So what I thought we'd do this morning is go through kind of what we're seeing on this stuff, kind of walk you through the process. If you're interested in this kind of stuff, get signed up for a WCN membership. That's $97 a month. We do have our upcoming workshop this coming Friday, Saturday, Sunday. So your monthly membership includes access to the class. Really excited about what we're teaching this weekend. Yes, we'll do a little more deeper dive into these multifamily deals and due diligences Friday, Saturday, Sunday as well. And yes, this list can be cherry picked. You don't have to buy the full amount, and there's some higher balances on this stuff, especially the New York stuff. And then there's also some lower balance stuff that's actually pretty decent in some of the areas. So I've already shared this tape with our WCN crew members. I know people are already looking through it because I can see people already responding to questions. And I'm like, what's on the tape is what I have. All right. And yes, I am paying attention to those that are watching also live on YouTube. So if you got some questions about stuff, feel free to type in there. But I would tell you, hey, go join up over on Zoom with the link that we provided for those to join in today, just for this purpose of going through and asking questions live as we break down these 20 non-performing notes. Now, multifamily notes, I started buying multifamily notes right off the bat back in the day, everybody. Okay. I mean, I was getting lists in from Capital One that we could cherry pick, Wells Fargo, multifamily, even some stuff from a couple of the big evil guys, on stuff that they want to get rid of. So there's an opportunity. How you have to approach a multifamily loan is not get so bogged down into, oh, it's the multifamily, I'm going to take an apartment complex over. You have to realize that you're buying the debt. Okay, you're the bank. And to get the property, you either A, have to foreclose, or B, work out like a deed in lieu, cash for keys, or a consent to judgment, especially if there's second liens. And a lot of these properties will have second liens probably on them from other things that have to be paid. You also want to make sure you're buying a first lien. And as far as I can tell, I believe these are all first liens on these properties for the most part. So let's dive into the spreadsheet and go from there and start looking at some of these assets. I've already looked at some of these properties this morning by just quickly pulling in the address. There's a couple that are very interesting. There's a couple that have some mixed use, especially the stuff up in New York and there's one in Chicago, which has some apartments and then some mixed use offices on obviously the first level, which is not bad. There's also the one in Georgia. There's one in Georgia that says multiple addresses. And so I have not got the updated list of addresses on those. So let me just share my spreadsheet here. Let's see, here we go. 20 multifamily loans. Share, let's make this a little bit bigger. Come on, share. There we go. All right, escape. Let's make this bigger so it's easier to read. Okay. All right. So let's just go through what's on the spreadsheet so you guys have a bit of an idea. Okay. So this spreadsheet is 20. And yes, I have permission to move this on behalf of the fund that's moving it. And there always says, Scott, you bring us a buyer, we'll gladly pay you. All right. So that's great. And then we've also got, there's two tabs on the spreadsheet. So you got just the regular addresses and you got a little bit more raw data, which I'm not going to share here publicly because it gives you the list of the guarantors, stuff like that. So you have the loan number on here, guaranteed FN flat. There's nothing in that. So that's going to be on the other page. The address of the property, if it's provided, like I said, there's multiple properties in Albany, Georgia, and then multiple properties in Hartford, Connecticut. I'm going to be up there, and it's hard to believe, so it might be something to take a look at. City, state, zip, number of units. That was not included. We added that in to take a look at just this morning. So if you're looking at the tape in the base camp group for our monthly membership, it does not have that column because I just finished that column literally 4 minutes ago before going live here. Total loan amount. Okay. Total initial draw. So like these are what's called RTL loans, residential transition loans. Okay. And these are all properties that basically were financed and then going through some sort of rehab process. Okay. And it tells you kind of this stuff on it. Because when you start seeing like total initial draw, that tells you that the borrower pulled some money from the fund on this to rehab the property. And it tells you original holdback, you know, how much money they've held back. Okay. Current holdback amount. Right. Current balance on the loan. So that's the thing to keep in mind. The current balance is basically, that's like the legal balance for the most part. Well, maybe not. I'm sorry. That's probably the current unpaid balance, not the UPB on it. All right. Because there's going to be late fees on these things. All right. So then you go over here to the next couple columns, amount, amortization type, fixed interest only loan. It's a rehab. All these were rehab. Dutch flag. I don't know what the Dutch flag, I have to look at that for, but anyway, they're all, I'm not sure what it's, one's true and the rest are all false. Original term, you can see these are short terms, 12 or 18-month terms. All right. And then you see term remaining kind of shows you how far behind they are. So this one's over a year behind. This one's age, so you can see the age of the loan, 28 months, 48 months, 27 months, 37 months, 52 months, 48 months, 72 months. And you see they're already kind of negative 46. They're already behind by a chunk there. Okay. 20 months, 3 months. So some of these are pretty far behind. Okay. Original rate, they're all rehab loans from 6.8, 6.8. And then they have a default rate here of 23. This does not make sense. A 45% default rate, but maybe it is. Woo, that's expensive. Okay. Original FICO, you can see they all have pretty good FICO scores. All right. They don't have current FICO date. They don't have that. Borrower experience will have that. They have that in the other column for a little bit. Original, I think AI LTV. I think maybe that's all in LTV. Current AI LTV. I'm not sure what the AI stands for, but I think it's all in. Original. Oh, as is LTV. That's what it is. Sorry, as is LTV. Okay. AR and after repair LTV. Okay. And the current after repair LTV is still at 64. All right. What's this? LTC, I'm not sure. And here you get into some notes here, like the loan purpose. It was a new customer, light rehab, purchase, no cash out. Experienced light one, heavy rehab, and all rest have been, light rehab, light rehab. Light rehab. So basically all light rehab except for this one heavy rehab on this one. This one is located where? Probably, it's the ones in Fayetteville, North Carolina. So 22 unit. Okay. Keep moving on over here. So original, that's where we're at. Experience, and then property type, multifamily, number of properties. One's got 3 addresses. Another one has, they're mostly 1, except for the ones in the, oh, this one has 5 addresses, but we still don't have the addresses for that one. So those are 3 addresses and 5 are the ones we're missing. 2 of the ones in Florida are right next door to each other. I think it's the same exact borrower. Let's go over here. Nope, it's a different. Oh, that's interesting. So it's different borrowers on these 2 that are in Hollywood, Florida. But anyway, going back here to the regular tape. So that gives you a bit of an idea. Original as is value you're buying is obviously pretty much below value. Okay. And so that's the thing you look at. If you look at the value where they're at and what you can buy that note at, are they underwater? Or are they over encumbered? Obviously, you're still going to pull comps. You're still going to try to do your due diligence. You're still going to look at the full payoff balance. If there are any pulling title, other liens on there that can affect your ability to take the property ownership over. Now, the idea here is, look, if you can buy a multifamily loan at a discount and get a pretty good yield, even if it's a distressed debt, or look at this stuff. If you can buy this at, like 14.9%, if you buy this at 65 cents on the dollar, all right, hey, that adds, you're going to be making a 20% cash and cash return just to keep them in the property. You know what I mean? And this is the one in Chicago, which I probably would not buy, but that's just me. I am not a fan of Sharp. This is one of the multi-unit ones. Okay. So, but anyway, so you've got some information on here to start doing your due diligence. Obviously, we were waiting for addresses. Take a look at those 2. You can see when these originated. Back in 2020 was the earliest one. Or no, sorry, 2019 was it was originated, July. And the most recent one originated was February of 2024. February and March of 2024. Okay. Oh, no, wait a second. February 2024. Yeah, May of 2024. Sorry. All right. And then you can see that the next pay date, they're all behind. So like this, the next pay dates are supposed to be like March of this year, February this year, January, November, February of 2024, May, March of 2025. So they're all behind by at least roughly, give it a take, 4 months. They're in default. Okay. Some ones that are further behind are ones be the bigger discounts. All right. Original maturity dates, these are all well beyond their maturity dates. Okay. And you can see there if there was an extension placed in there, yes, true for a couple of these, false for others, and they're all delinquent, and they don't know the occupancy if they're occupied or not. If we go over here, the notes, let's go back to the notes, because that'll tell us the foreclosure aspect of these things, where they're at in the foreclosure process. No, I don't have anything else in here as far as the foreclosure process. It does give more on the advances. Delinquent taxes and liens. Some of these have some obviously delinquent tax and liens attached, so that's something to keep in mind. Some of these don't, and that's okay. But for most of these are going to be a foreclosure process, or you're going to get a consent to judgment if the borrower is willing to do a deed in lieu and walk from these things. So let's start looking at some of these assets and start looking through some of the numbers on these, just to give you a bit of an idea. Okay. So what I'm going to do is I'm going to resort these, custom sort by size. We'll start at the biggest and work our way down to the smallest. We're going to get rid of some of the states we don't want to waste our time in. Okay. Actually, I'm going to resort this by the address. So there we go. Over on this one. All right. So custom sort. Resort these by unit numbers, number of units, largest to smallest. All right, so now we've got these, and we're going to get rid of. All right, we're going to get rid of a few that we don't want to waste our time with. If you're a New York or New Jersey investor looking for multifamily, then reach out to me directly. I'm glad to shoot this over to you if you're on our approved buyer list. If you sign an NDA and a fee agreement, we charge 3 points in a non-performing note purchase, whatever you end up purchasing. So that's something we'll have you guys sign beforehand. Anyway, let's look at the ones we want to spend our time with. So let's just get rid of the stuff we don't need to spend time on so that we're getting rid of New York, New Jersey. All right. The Connecticut and Georgia ones, unfortunately, don't have the information. So we're just going to leave those off. Okay. So that's where we're at. So you can see on here, let me just give you a bit of an idea. This one here in Chicago, Illinois, this is a mixed use. It's 8 units mixed use based on what I could tell online. There we go. 545 side cap. So you see up here, this looks like it's 8 units on top with 2 retail units on the bottom, 2 office. Okay, tax refund max, and this other one. This is a photo from 3 years ago, so it may not be there, it may be vacant. Okay, so supposedly 8 units. So you can get an idea there. Kind of normal South Side Chicago area, which is not fun for me. Let me pull up the next address. This next one is 78 units in Indianapolis. This is a bigger complex based on what we could find. Come on, let's share. All right, so this one, so this is 78 units in Indianapolis. I want to make sure my screen is updated here. Share. There we go. Pulling over shoulder. Okay, so it's not a bad looking complex, right? I don't know what part of town. This is from June of 2024. The thing that concerns me, oh, see, there you go. I can't tell if it's just this unit or all 4 of these. It's probably just this one based on the address. Otherwise, they say multiple addresses, 78 units. So maybe it is all of them. Yeah, probably potentially 78 units. Okay. Not a lot of cars in the driveway. That kind of concerns me. This is from June of last year. Okay. Not bad looking. Okay. And let's actually do a little deeper dive on this one. So if we go back to our spreadsheet here. All right, 2120 North River Avenue. It's 78 units. It's got a $3.7 million loan. Yeah, it's probably all of those. Original term was 36 months. I had the longest term. 7.25, 7.25. So this might be the one. It's probably the least amount in default. 75%. Light rehab, they say 4.95 is the as-is value. Matured in March of this year, so they're behind. Yeah, so they're behind by 4 months. They've advanced basically about 600,000. Okay. And we just got the data was pulled 4 days ago. So the lender's tired of messing around with these guys, I guess. 4.95, they figure as is, the original. 75 LTV. So on something like this, I mean, there's equity. So, depending on the numbers and what your money's going to cost you, 65 cents on the dollar, the 3.7, because we all know values have changed quite a bit, especially multifamily side, right, guys? So if we just figure in, since these are all non-performing, Let's just put in 65 cents on the dollar and see if that makes sense. That's where I would start my bids, and just run these all the way down because you don't know what kind of condition they're in. There you go. So the thing you have to do as a multifamily investor is what? You got to figure out your cash flow. Is it going to make sense cash flow wise on what their monthly payments, P&I payments are supposed to be, right, to you up to 2.4? It was in default. Well, they're probably not going to get that. So is it going to make sense for you to foreclose and take this property back from the borrower, right? And then you got to go through that process. And then what is it going to be? Now, the nice thing about being in commercial notes is the minute you start with the foreclosure process, you have the right to collect rents. Okay, so that's one nice thing that you can do as a lender, start collecting rents and working to do that. Now, we don't know the vacancy. I don't know the occupancy. I don't know the monthly P&I, the rent payments on these. That's something you're going to have to do a little bit of your own Sherlock Holmes. What's the makeup on it? How occupied is it? That's the unknown. Now, you could use a service like Credit IQ, and that could possibly pull up the where they're at in the financials and what they reported. But this one, these assets are probably not going to be in there initially because they're probably not with a CMBS lender. Okay. But for something like that, that's where I would start my bidding with the unknown. 65 cents on the dollar. I would even go lesser depending on where it's at, and the more you find. But that's the thing is, if you can get something at 65 cents on the dollar right now, and it's going to turn into a pretty good rental, and you can take foreclosure, start collecting rents, there you go. Yeah, So if we go back here, let's go back to a little bit of information on that one. Let's go back here, share. Let's see what all we can find about this. So 22 North Zilla Road, Realtor. Here we go. You can see, yep, it is all of these units, which is nice. It's a whole 4 or 5 buildings. 3.17 acres. Let's go back one more. Roland Maynard property data. Here we go. Yardi matrix. Got to like Yardi. Okay. Multifamily property was built in 1964. Has a total of 78 units with the following unit breakdown: 1 bedroom, 2 bedroom, 1 bath. All right, so it's got 1 and 2, 1 ones and 2 ones. Don't know the mix up on it, breakdown on it, so you have to figure that. So checking rents, seeing what the rent rates are. Is you jump in, you already take a look at it. But that's the thing, is figuring out what your cash is going to be. You got a question here from somebody. What's the question? That's correct, Tony. And that's the whole goal, is to get appointed as a receiver. That's what we've done on some of the multi-family properties where they were collecting rent. We did that in a couple down in West Palm Beach. Did that in a property also in Indianapolis. So it turns out that could be good cash flow while you're finishing up the foreclosure process on these types of deals. But anyway, that one, I mean, once you dive into your due diligence, obviously a lot of that stuff will be provided if your bid's accepted. And that's why I started at like 65 cents a dollar, because you fade it up, fade it down, depending on what you find in the due diligence process. Sometimes owning the bid, controlling the bid is just as valuable because sellers don't necessarily want to go back. And if they can sometimes be close to where you're at. And also on something like this, the lender might be willing to carry that loan for a period of time. If you bring it that way, you don't necessarily need to bring in the full amount due on it. If you're going to buy it at 2.4, depending on the value comes back lower than 3.7, then you're going to be lower than 2.4. Trying to figure out values on this stuff is kind of the trickiest aspect of the multifamily side of things. Okay. But that's not a bad looking little property. 78 units. Looks like it's in pretty decent shape. And this was considered, based on what they told us here, light rehab. And that's at an 18% default rate right now. Okay. That's a pretty good default rate up from 7.25. So I guarantee they probably haven't made a single payment. This one was, when was the last payment made? Originated in 2022, matured March. Next pay date is August of last year. So they're about a year behind. Year behind on this. Okay. So that's potentially a decent one, right? Let's go down here. The next one in Miami, 1281 Northwest 61st Street, Miami, Florida. This is also it's a bunch of small one bedroom, one bath. Okay. This photo is from December of 2022. This is what, 22 units, I think. 33 units, actually. Okay. Question here from somebody. Not a great neighborhood. Yeah, I could understand it. Thank you, Tony. Totally agree. Probably not the greatest neighborhood to be staying in. There's good areas and bad areas everywhere, right? I always said when you see a lot of gates, but you've had some more, it's not so bad. This is taken in December of 2022. Look at that Christmas wrappings. You get some pride of ownership there, pride of tenants. But it all depends on where the numbers are. Is it worth it? You're not managing it. You probably would have an on-site property manager, have somebody work with it where they take it over there for you. So same thing, figuring out what the rents are in that neck of the woods, and then figuring expenses and going from there. Well, I live here, so know them. Yeah, I don't doubt it. I know you live there, buddy. Yeah. Not the greatest neighborhoods, but doesn't mean you're living there necessarily. Other people live there. Area will be redeveloped soon. Yeah, definitely agree. And I think I saw that this property had already been painted. If I remember looking at some of the stuff, where did I see something here? That's the most recent. Maybe it was a different one. Let's just look at this one. 1281 North of 61st Street. Now, yeah, 485 rent. So 485 is a square foot. Rents of, they say 1,600 a month. I don't know if that's right. But what's great about it is you can kind of see the makeup of this one bedroom, one bath. Not the greatest photos. Kind of small, 485 square feet. All right, the guy obviously looks like security cameras there. So ghosts, obviously, as it says here, probably a big Section 8 property. Okay. I think it's 281 a unit. Let's go back to what they say on here. So on this one, come on. This one's in 33 unit Miami. They lent 535 against it. Current balance is 2.2. So they must have borrowed some of it. They got the loan to purchase it and then took some rehab and then didn't. 2.2, 12 term, 12.99 instead of 25% default rate. They value it somewhere around 5.6, 4.8 to 5.6. I don't know what date that is based off of. So originated May of 2024. And they stopped paying in April. And it just matured. Okay. So they owe 2.2 on a $4.4 million property, give or take a little bit. Yeah. You might need to be at 80 cents on the dollar for that one, if it makes sense. It's at a higher default rate. So I don't have the P&I payments on here where they're supposed to be, obviously, for the default rates, but that's something we look at in the due diligence process, figuring out cash flow. I mean, it's not too hard to go and figure, okay, 2.2 at a 7.9% interest only, right? And actually, we could probably just go in there and just run some quick calculations across the board on this. So let's do this. So let's do this. Yeah, you'd have to look at, obviously, code enforcement liens definitely be something to worry about. I mean, that's why you're going to pull a full title and then call the counties is what I would do. So let's just do interest only payments is equal to, we'll just say the balance. Change it to a dollar amount. And divide that by. So is that right? So if it's at 8, if it's 15%, yeah, that's per year for the year. Okay. And let's run that number all the way down. And then we'll divide that number. So that's going to give you a better idea if you pull rents on these buildings and say, okay, what are they supposed to be paying cash flow wise? Figure to roughly just do a 50% expense ratio for the most part. Let's do default, insert default rates. And divide that by 100. Wow. Supposed to pay that a year. Woo. So there we go. So now we can kind of see that their payments have gone from one number to another number, right? There you go. So they went from 12 grand a month up to 18 grand. Went from 23 a month on this big one, 22 a month to 55, from 6,200 to 10 grand. Okay. So that's the idea to see is when you look at income, especially if they've got units under repair, what depending on what they're replacing, obviously they can go from a bad situation to worse really, really quickly. Okay. So let's move on over. So that's the Indianapolis, the Miami one's not the greatest area. This one in North Carolina, Fayetteville. Let's look at this one real fast. It's 22 units. And so these are interest only loans. I just dropped in, just the amount owed times the interest rate and divide that by, since it's showing 14.99 versus 0.1499, you got to divide it by 100. All right. So let's go in here. Let's look at the overhead of this one because this is 22 units. It's all kind of garden style. Right. So I don't know if it's this one unit or this other unit. So let's drop our little guy here. Because I don't think this is 22 units by itself, right? I think it's also including this address here too. And it could be, yeah, so it could be 4 units on that one. Let's go down the street here a little bit. I don't think it's anything behind them. See, this is from April 2012. So that whoever owned it has repainted it, made it look nice, because this is from July of 2023. So maybe it's multiple addresses here, which is a possibility. So that's not a bad looking little property in Fayetteville, right? Fayetteville, North Carolina. You know, roofs look current, look pretty decent. Something like this, you definitely want to go out, drive by, fly out, take a look at, walk the property. Not on the front end, but obviously part of your due diligence process. Now, I don't know what kind of process, this is, you got a vacant asset here. I don't know what happened with that one. You want to take a look at that one, whether it's smoke or fire or just damaged window. You see some signs of for rent. I don't know if this is a good area or a bad area either. That's another thing to take a look at too, is an area you want to own distressed assets at. Okay. So that's the Fayetteville one. Let's go over here and pull up the next one here. Fayetteville's 22 units. This one is in Toledo, Ohio. It is 20 unit property. This next one. And it's this building here. And this is from May of 2022, this photo. I don't know if it's occupied or vacant. But it's kind of a neat looking little building, right? Let's see what kind of other information we've got here. Apartment building, the building not rents for sale. Saxon House Apartments. Sometimes you'll find a listing for it. Come on. That's it. Price per unit, 67.5, built in 1963. Obviously, it's got a cap rate, 20 units. I don't know how old this is either. All right, 1.35. Let's go back to the spreadsheet and take a look there. 1.35. Let's see what's owed on this thing. All right. So they owe $975 on it. That's what they borrowed. So they're trying to get cash out of the thing. It's at an 18% default rate. Yeah. So they're trying to sell it at 400 grand above what they really technically kind of own, or less, because that's getting eaten up. So their last payment on this one was made light rehab, multifamily. They figured at 1.3. Okay. Bought in June of 2022. It matured January of last year. Last payment next due is February of this year. So they're 5 months behind. They were given an extension because it says true, but now they stopped paying. Depending on what kind of condition it's in, that might not be a bad. It's too bad there's not any interior photos of the property, right? The default rate, got to sell it. Of course, you got to check back taxes owed on these things, mechanics liens, all that stuff, making sure that the vendors are getting paid. We've seen that on a lot of multifamily loans, especially in default. They're getting people to come out and do the work, but they're not paying the vendor. So that's a possibility on that one in Toledo. I don't know if that's a good area or a bad area. But if we go back to the map, it looks like it's just off of a residential area, right? Go back here. There's the apartment. Yeah, see, it's right. next to residential. A church over there. What is this building? It's kind of a weird looking building there too. But I don't, like I said, I don't know the condition currently, but if somebody got light rehab, it's near a residential area. Is there a university? At two churches there. The Methodist and the Apostolic Church, neighborhood center. Might not be the greatest here, but I don't see Divine Printing. Yeah, it might not be a bad area there. Let's drop our little guy down here and see what kind of houses these look like. Yeah. It's not a bad little neighborhood. So you get some other multifamily, maybe. Some bigger houses. Oh, that's a pretty good size house. Look at that. That may not be a bad neighborhood. I mean, I wouldn't mind owning that area, but it all depends on what kind of condition the property is. So that's, hey, may have to fly to Toledo. I think there's another one here. Let's see, where's the other one in Ohio at? Back to our spreadsheet. Toledo, Ohio, and Cleveland, Ohio. This is the 4-unit. That's a 4-unit. We'll look at that later on. Okay. Not so bad. The Chicago, Illinois. This one is hard to tell if it's I don't think it's in a very good area. Let's go back to our map. The photo gives it like it's a rougher spot. Yeah, see, it's kind of a, let's do this. Let's look through the aerial. Yeah, so it dropped a little tilly dropped it. So it's like it's this building here, I think. Yeah, it won't drop us anywhere except right over here. That's smack dab on oh, what is this? Somebody digging through the trash or dropping trash off there, lady? No. I don't know if it's a see, yeah, that's kind of a rougher. Hey, there's a multifamily at a big discount. Don't think I'd want to own that in Chicago. So let's go back to the spreadsheet. I'm just not a fan of having to try to foreclose or evict in Chicago. And that's 16 units, same thing. Let's look at that. They owe 872. Default rate of 45%. I don't know if that's how that's legal, but I guess so. And they gave it a value of 1.6. I'd be afraid this is a second lien, maybe. Well, maybe not. 872. Maybe it might be. Could maybe pick that one up cheap. Maybe it makes sense. All right, let's go to the next one though. And we'll wrap up here. So this is a 10 unit. This one doesn't look too bad. In Milwaukee, it looks like it's an old school building. It's been converted. And I believe this is 9 1-1s and 1-2-1. Yeah, it doesn't look like a school, like a 3-story. 928 to 936. So I don't know if that's a good area, Milwaukee, or a rough area. Once again, you get some multifamily on the board of some residential stuff. I think, yes, you get some residential stuff down here. This is photos from 5-6 years ago. We go back here to what it said on here when I was looking at something. 10 unit. Also, here's the actual listing of it. Okay, so they're trying to sell it for 310. Well, that may be just the 1 unit. There was a description that popped up. Where is that at? Own a 10 unit in Milwaukee. The unit mix is 9 3-bedroom and 1 2-bedroom. I apologize. So they're actually bigger units. Okay. Here we go. Beautiful renovated apartment. Each unit features 3 bedrooms and 1 bathroom. They're renting for $1,200 a month. So they've, here we go. So we see what kind of work they've done on this one. Done some nice upgrades, huh? And that's the thing. If they've done this upgrade and they're not paying because they probably can't get refinanced out, this is the opportunity to step in. Probably not to do any work on these things. That might be advantageous, right? That was a not a bad looking property. Okay. Let's go back and pull up the next one. Oops, where did it go? That one they owe 232. Current balance, sorry, 423 is a current balance. 423 is a current balance. Again, at 45% default rate. They valued it at 860 after repair. 560. So yeah, they don't have that much. If their current balance is 4 something. 423, yeah. I mean, it's 40K a unit roughly. That's not so bad. So let's just go over here and figure, let's just run some numbers here. So 420. So if you figure in 1,200 a unit, and there's 10 units. So that means you've got 12 grand coming in a month, right? 12 grand coming in a month, as well as times 12 months is equal to 144,000. Basically, that's your cash flow, right? If you figure just a 50% expense rate, I don't know if it's individual metered or not, so I'm just going to do a rough 50. So basically, your gross is $72,000. All right. You're technically $72,000 if you're buying this note at the, let's see here. At the 65%, 275, that's a pretty good deal. That's like a 25% cap rate if you end up with a property, right? Now, if you don't end up with a property and you pay 275 and you sell it at 423 even at the auction, that's $160,000 profit if you sold it at the 423, considering it's got a value of 860 after repair. I don't know when the dates of this are pulled for these AR, but that could be a potentially nice little nugget there. Might be worth it. If you could get the seller to carry financing even on that purchase, sometimes they'll do that and go from there. All right. Then the let's do the Cleveland is just a 4 unit. It doesn't look that exciting. The Chicago one is a 6 unit with mixed use. We'll look at it. But the Hollywood, Florida, this is the one. They're both right next to each other. 400 to 430. So let's just do this one here, and you can kind of see these are smaller complexes. It's like these look like these are. Let me pull this up here. Come on. All right. So let's click over here. North 19th Avenue, Hollywood, Florida. Sorry. 432 to 462 is the second one. So this is part of the, you see these little smaller 446. But this all goes down the street. This is part of this complex called the Colony Club. 400 is the other loan. So it's two separate loans for these buildings. I go back to the spreadsheet. Different borrowers. Okay. So it's 8 units. So it's 16 total units supposedly across these two properties, 16 units. And they're into for the same loan amount, 1.852. These are rehab. Original term was 11 months. They're now behind. They're now at 17% default rate. What's the balance? It's 1.8. So it's basically 3.7 million on 16 units. And these are experienced. Let's see here. And they valued him at original as is value was at 4.9. Yeah, 4.94. These two here. So they stopped paying it. Next pay date is February and March of this year. Matured in March. So these have been extended. Original date was in 2022. Yeah. They've been extended a couple times, maybe once or twice. And now they stopped paying in February and March of this year. That's next due. So maybe yeah. So they are, 4 and 5 months past due on this process. And I don't know the occupancy, but it's worth, 5.92, and you're in at 3.6. 3.6 is what the balance is. If you add these two together, right? Yeah, 3.7, sorry. 3.7. So offering those at 65 cents of the dollar isn't a bad day, but depending on what the lender wants, they may not want to take that big a haircut. They may try to sell it to you at full legal balance versus the default, who knows, or what they lent on it. That happens. It all depends on an individual by individual basis and where it's at. But those guys, if you're interested in stuff, it's in our Basecamp group there for our WC members. Tony, you've got access to that's in there. Or no, you don't. Or you're not part of the WC Inc. anymore. But you guys can get signed up for that really easy by going to noteumbrella.com. That's noteumbrella.com. Also, guys, we have our upcoming class this Friday, Saturday, Sunday. So you have access to that as well if you've signed up for our monthly membership by going, once again, check it out. NoteBuyingForDummies.com is our workshop. It's $9.97 normally. We're running a 50% discount, so it's $4.97. But the monthly membership is just $97 a month. The only thing we ask is that you be a part of the monthly membership for 6 months. So we keep on. Any questions, any comments, any concerns? Don't be surprised if we start sharing more information on these deals over the next couple of days as we do a deeper dive in this and get rock and rolling. So otherwise, guys, thank you so much for joining us here. Like I said, opportunities exist if you just know how to market, make the right connections. If you're not finding the right types of deals, it's just because, you're marketing, but it depends on what type of deals are you looking for. Now, are you being way too picky as well? Sometimes that happens. Well, I only want this, this, and this. Okay, well, if you only want this and this, it is. But the great thing about our WCN membership, guys, is we upload tapes like this into there for you to take a look at, for you to cherry pick. First liens on residential, reverse mortgages. Sometimes we'll see some tapes of second, stuff like that, but there's a lot of opportunity for you guys to take a look at. So these 20 non-performing multifamily notes are just another tape that we get in on a regular basis from some of our sources. So hope you enjoyed it. If you guys want to dive into more information, check it out at weclosenotes.com. Thank you so much for listening. Have a great day, and hopefully we'll see you this weekend at the virtual note buying workshop. Otherwise, take care, everybody. Bye. Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential and commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing deals. We get lists of notes from banks, hedge funds on a regular basis, not one or two or three or four, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day one is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day two is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day three is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have a 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilet tanks and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.